Welcome to the trading floor. I want to begin with a very practical memory from my years on the desk. A client called with what sounded like a simple question. They had been quoted a forward rate. They wanted to know whether the number was fair. The formula itself was not the problem. Covered interest parity is straightforward on paper. Spot rate, interest rate differential, correct day count, correct value date. But professional pricing is never just the formula, it is the formula, plus conventions, calendars, settlement logic, tenor handling, and the discipline to produce the same answer every time. That gap between knowing a formula and running it properly is exactly the gap the FX Cash Products Toolkit is designed to close. I am Luigi. I have spent 38 years in financial markets, with experience across foreign exchange, money markets, derivatives, and treasury advisory work. This episode is a guided tour of the Python toolkit that accompanies FX Cash Products. It is not a collection of toy snippets. It is a working package built to help treasury and market professionals price, value, test, and explain real FX Cash products with more structure and fewer errors. By the end of this episode, you will understand what the toolkit contains, how the main modules fit together, and how to use it alongside the book to build genuine pricing capability. Let us begin. The toolkit is delivered as a downloadable Python package. Inside the package, you get an installable analytics library, chapter by chapter, example scripts, notebooks, support documents, and configuration helpers. At the center is the FX_toolkit package itself. It includes pricing modules for spot, forwards, FX swaps, and non-deliverable forwards. It also includes valuation logic, portfolio aggregation, hedge accounting effectiveness testing, advanced analytics, and market data integration scaffolding. Alongside the library, the package includes chapter example scripts, notebook walkthroughs, a formula reference sheet, a configuration interface, and an integration test script. The design philosophy is very simple. The code should reflect the market logic explained in the book. If the chapter explains the pricing relationship, the toolkit should produce the same result with structured inputs and transparent outputs. Installation is also straightforward. You extract the package, move into the toolkit folder, and install it locally with python-m pip install-e. If you want the optional notebook and market data helpers, you can also run python-m pip install-r requirements.txt. The toolkit includes command line helpers as well. You can run fx-toolkit info, fx-toolkit init-config, fx-toolkit provider-status, and fx-toolkit smoke-test. One more thing before we go further. If you are completely new to Python and want to build that foundation first, I run a free open source learning platform at chapters.berta.one. It takes you from Python fundamentals all the way through to machine learning with interactive notebooks and no installation required. Start there, then come back to the toolkit. The two are designed to work together. Let me start with the module I expect many treasury professionals will use first: forward pricing. The core class is FXSwapPricer. You pass it a typed forward price input structure with the currency pair, spot rate, domestic rate, foreign rate, trade date, value date, and optional basis adjustments. The toolkit then returns a structured result with the forward rate, forward points, day count fractions, discount factors, and related analytics. Here is a clean example. Take euro-dollar with spot at 1.0850, US dollar rate at 5.25%, euro rate at 3.75%, trade date on the 10th of March 2026, and value date on the 10th of September 2026. With those inputs, the toolkit produces a forward rate of approximately 1.093075. That is about plus 80.75 forward points in pips. What matters is not only the number, but the way the number is produced. The toolkit applies the relevant conventions, calculates the day count fractions explicitly, and makes the mechanics inspectable rather than hidden. And if you want to model basis effects, you can add them directly in the input structure and let the pricer adjust accordingly. The next major module is FX swaps. The core class here is FXSwapPricer. It supports standard spot forward swap logic, forward structures, roll cost calculations, and implied funding rate analytics. This is where the toolkit becomes very useful for treasury funding work, because for many users, the important question is not simply what the swap points are. The important question is what those swap points imply about funding cost. In a representative toolkit example, the near leg is 1.085000, the far leg is 1.089120, and the swap points are approximately plus 41.2 pips. The pricer also returns an implied funding yield of 0.74% annualized on an actual 360 basis for that structure. That kind of output is valuable because it lets the treasury user move from a quoted market convention into an economic interpretation. The NDF module addresses one of the most important areas in emerging market FX. A non-deliverable forward is a forward contract where settlement happens in cash, usually in US dollars, rather than through physical delivery of the restricted currency. The class is NDF Pricer. It handles both the NDF rate calculation and the cash settlement at fixing. Take a simple settlement example. A contracted rate of 7.28, a fixing of 7.315, and a notional of 10 million renminbi produces a dollar settlement amount of approximately $47,847. Those are not just abstract formulas. They are exactly the kind of operational calculations that users need to run correctly and repeatedly. Pricing a trade is only the beginning. The toolkit also includes valuation and portfolio layers. The valuation side includes mark-to-market calculator, which marks existing positions to market using the contracted rate, the current forward rate, the remaining tenor, and discounting logic. On the portfolio side, you have portfolio aggregator. That lets you add positions and analyze net exposures by currency, gross exposures, maturity profile, and total portfolio notional in dollar terms. For treasury teams running multiple hedges across multiple pairs and maturities, this is where the toolkit moves from education into daily working utility. For corporate treasury users, one of the most practical parts of the toolkit is the hedge accounting module. The key class is Effectiveness Tester. It supports dollar offset testing, regression-based testing, and hypothetical derivative testing. That means the toolkit can help support the quantitative side of IFRS 9 and ASC 815 hedge effectiveness work. It does not replace governance or documentation judgment. What it does is make the testing mechanics more consistent, repeatable, and auditable. One of the practical strengths of the toolkit is the way it approaches market data. It works even if you do not have expensive vendor access. Manual values can be used. Yahoo Finance can be used where appropriate. And for institutional users who already have vendor access, the toolkit now supports Bloomberg and Refinitiv or Aecon integration paths. That does not mean the toolkit magically gives you vendor access. It means that if you already have the vendor libraries, credentials, and session access, the toolkit can use them. The simplest way to check your environment is to run fx-toolkit provider-status. That tells you whether Bloomberg, Refinitiv, Yahoo, and manual providers are actually available in your local setup. When you obtain the toolkit, you are not receiving only one Python package folder. You are receiving a working toolkit bundle. That includes the installable FX_toolkit package, chapter-by-chapter example scripts, notebook walkthroughs, a formula reference sheet, configuration files, sample data, and an integration test script. This is important because the educational value does not live only in the pricing classes. It also lives in the examples, the support materials, and the way the package is structured for guided use. The Python toolkit is available immediately with the standalone toolkit purchase or the book plus toolkit bundle. It is not included with book-only purchases. Access is handled through the download portal after purchase verification. From there, the user downloads the package, installs it locally, and can begin working through the examples and notebooks. The licensing model is also straightforward. This is single-user licensed software for internal commercial and educational use by the verified purchaser. Redistribution is prohibited. If the customer has download or access issues, support is available through Rondanini Publishing. Let me finish with the point that matters most. In professional markets, mistakes rarely come from not knowing the formula exists. They come from applying it inconsistently, from missing conventions, from using the wrong dates, from forgetting basis, or from failing to turn a pricing relationship into a repeatable workflow. The purpose of the toolkit is to reduce that friction, not to replace judgment, but to free judgment from avoidable mechanical error. If you work in treasury, FX advisory, or market risk, that is where real value begins. I am your host. This is the trading floor. Thank you for listening.